just a quick update on the trades I took last week. Today is Sunday, the 16th of January, 2022, and I just want to share the trades I took and why I took them. Last week, I took two trades. I traded GBP USD and I traded gold as XAU USD. And the reasons why I took these trades because of the technical analysis I have done on the charts earlier. So diving into it, on the monthly and weekly time frames, I had previously identified the direction, the market trend, and marked it out. I had these zones here and here as my Fibonacci levels, and also confluences with support and resistance levels. So I knew if the market was trending downwards, these are the areas I'm going to take profit at, or possibly find U-turns to get back into the market for long positions. So going down to the daily, the market was in a downtrend. So while the market was trending downwards, obviously you'd be naturally inclined to take sell trades, which I did at strategic points. But I also took a few buys based on analysis I had done on the smaller time frames, and obviously I knew where the market was headed at the moment. So with GBP USD, since 20th or 21st of December, I've been going long on GBP USD, and I took a long position still last week because I had identified a trend line. So all I did was to wait for the price to get to the trend line, and I entered for a long position. I think it was somewhere around here or so. Can't remember, but I entered a long position and I recorded that on my other platform. And another reason why I'm still on the long bias for GBP USD is because price trending downwards in a trend line, and the price action has broken it to the top side of the channel, and this indicates that the bulls are taking control. So having done that, all I'm waiting for is for price to come to the backside of the channel, and I'll enter for a long position, obviously with the risk management that works for me. So when you're entering your positions, you use a risk management or a strategy that works for you. So the other trade I took was gold, and with gold I had taken a short position, and this was it right here. So I previously had identified market trends, as I mentioned earlier, and I used trend lines and counter trend lines. So after identifying this level of resistance, I saw that price had reached there twice, failed to break it, and it came back the third time. This third time is a liquidity grab. It tries to pull out people from the market. And after I saw this and this pattern that's formed right here, I knew that the price was going to go short for sure. So I quickly used this trend line, this counter trend line, to identify where the market is going to break from, and I could see it's this area, hence why I've drawn out a short position tool right here, which I'm looking to enter for the coming week. But for the previous week, I took this quick scalp right here because price failed to break the previous high in this area, and it wicked out. So as soon as I saw the wick on the 15-minute time frame, I knew I was to enter for a short immediately down to the trend line which I had drawn, and it was a nice 1:3 trade. I think I profited 3x on that trade. And so that's it. Just a quick update, guys. I hope you find this helpful. I hope you understand my thought process.
It has been several months since we last posted a video, given the fact that there's been this new variant going around, debates about new lockdown and so forth. My partner just moved back to UK temporarily, so we both didn't have much time on our hands to be producing new content. But now that we have some free time, hopefully in the near future there should be more videos being released. Now what I want to do in this video in particular is just talk about the thought process of why I've entered trades, some of the mistakes I've done, what I need to think or keep in mind of when I'm in a trade or when I'm about to take a trade. Talk about stop losses, take profits, and just generally the thought process of a trade. Now before I begin, I just want to talk about DXY. DXY dollar index. So before we did actually have this, this is what I had mapped out on a Sunday on the 9th, just noon. So on a weekly, we can see that it's near a very critical zone, or it might be considered critical zone looking back in the past. Coming back onto the 4 hourly, we've had this high. We've also had a high wick test. So that's indicating now with this big selling pressure here and here that this is our new ceiling, if you will, or resistance or support. So what I've done is, this is where the gap is, just on this video. On a smaller time frame, it shows that we had a very small little gap. Just a few pips of gaps here. Price has been neglected, a lot of buyer pressure, retest of this buyer pressure, and then we went back up. Now, what I had anticipated in this video, if we did see a pullback in this particular area, which matches with our support, just here, this support right here. After that little gap and that test, it was very inevitable to notice a a retest coming into play. Now, as for finding this area in particular, retracement zone for entry short, with the high down to this low here where the support was, sorry, this one right here. So the previous high, or if you will, lower high. So the previous lower high, map it out, use your Fibonacci tool, and then you can almost instantaneously identify where the price might pull back into. And then on the smaller time frames, watching the price action, left head, right, and then obviously this would where I would usually enter, unless obviously I have been able to monitor quite closely and then maybe put a stop, a sell limit at 78 or just a few pips below 78. And again, you would have found another entry here. So here we have bounce of that morning's Asian. So we bounce of the Asian support back up here into sort of a New York, kind of New York session here along with the UK, push it back down. Now, how I identified this region right here where the price is set, so lovely. Go back into the 2 hour. So the price has set so lovely at this 61.8. Don't know if you can see it, but if I just make the text a bit more darker, perhaps. I'll keep it at that color, but what I will do, text, move it to the right so you guys can see. So 61.8 just there. How I identified this, get the high test, so the ceiling, go to the ceiling or where the high tests were, bring it down to the most recent support, and there you'll find your your entries more or less. But what I do sometimes I play around with the closer and actual wick, as you can see, I've played with the closure, used a little box, highlighted where it could possibly come down to, and again, here we are. I'm not so fussed about the fact that the price has dipped a bit lower. Why worry about that when you could have caught this move from here to there instead of this move to there? And again, if you had been in this, if you had been monitoring from this time, you could have caught the 78 from here, or ideally maybe from here to here, another 78 or just below 78 to the downside. Now this doesn't always pan out, this Fibonacci, so from here to here and show me a target here doesn't always work on all the pairs, but that's another video for another time. So moving straight on, Euro USD in conjunction with DXY literally does the opposite. Here we've seen left head, right shoulder, down. What I call this is a wonky head and shoulders, or just just a wonky head and shoulders really. So now I'm gonna go into the trades that I have took for this week, and I'm gonna go a bit about some of the wrong trades, what I done wrong, and just kind of give you my insight to journaling on these pairs. So without making this video any longer, here we had a initially I was either a short or long, but predominantly a short. After seeing this retest here, we did fail, so that would have been this push here. We did fail to push back further low. This right here matches I think with 60 or 70 or 50 fib, and then we push back to the upside. What I've done with this pair in particular is I've broken down the highs and the lows of trading sessions. So here we have the UK, or the Asia roll into UK low, bringing it down to 1 a.m. where US did get involved, and we pushed it up higher. Around this time, we had UK, we had America close, and then obviously Asia pushing it back up once more and bringing it back down to the lows, to the closing, which is here, Asia low roll into UK. So once we did see that, we saw one more push to the upside, which was New York and the UK's push to the upside. Now I don't think I have I think I have it before, but I don't know if I can find it right now. Anyhow, avoiding that, I had a trade placed around here after we saw this failure of this break this week right here. So we pushed this, got this little push to the downside, and I entered around somewhere around there. Let me see. Okay, so I entered just around here. So if you want a bit of a smaller time frame, so I saw this little break of that, get a retest to the area, had the Fibonacci placed, and kaboom to the downside, which was the Asia roll into UK support. Price reversed, again left head right, which is similar to the Euro USD pattern that we can see here on a bigger time frame. Left head right, go back to dollar, gold, smaller time frame, left head gold, right shoulder. I took a trade around here, I think. Let me just see. Yes, I took a trade around here. As you can see, this 18.23.17, that's where I took my initial profit. I saw rejection around this area, and I thought, let me minimize, let me capitalize on this profit and minimize my losses. Would have captured a nice trade overall to the downside. I think this was UK, yeah, the UK close into Asia opening, which bounced here. Again, left shoulder inverse right, head and shoulders back down. So yeah, I did trade this. I did take this out a lot earlier than anticipated, but what I have seen to found is when I do take a trade and I'm not busy, maybe trying to distract myself with something else, and I want to monitor, um, I find myself to give it attached to the price action. And what I mean by this is trying to capitalize as much as I can. Now, I don't want to be too greedy um, by taking every profit that I see to bank, but I also don't want to lose. So I'm trying to find the balance in between these when I take a trade. So when I do focus on these smaller time frames, I want to sort of find the balance so I don't take a losing trade or so forth. But overall, as a reminder to myself and to a lot of you guys as well, when you do take a trade, just let your analysis fold out. That's exactly why with Euro USD, I did not take any trades. I just let the analysis fold out, and come to UXD, come to gold. I didn't let my trade fold out. I didn't let my analysis fold out. I was just too involved with the price action, and I mean, I got a winning trade overall, but not the sort of trade I wanted, unfortunately. Moving on. Now, I did take some more trades just to show you that what I mean about being too focused on these smaller time frames. Where are my other shorts? Oh no, that can't be right. 1 second. No. Seems that I've deleted my other. That's not good. So we have one here. We have this short right here that I took. I did have a long placed out here, stupidly, very stupidly. It was a 78, and I'm very aware of this sort of formation, but I thought that was a bit too obvious to rule out. So I had placed a long from here to up here, which obviously didn't work out. Took a short here, small little short, that played fine. And then I had another short around here somewhere, just around here, just a very mini short. Again, this is just a understanding of why you should let your trade play as it is. And you can find a lot of these entries, re-entries. So as I stopped, took out the trade around here, I could have waited for another move up. Fibonacci 78, enter, 78, enter. But we didn't do that. We capitalized on the trades that I had open. Anyways, moving on, GBP AUD. So GBP AUD, what I had on it was, I think, yeah, so this was what it was showing to me on the 9th, just here, this little breach right here on the daily time frame. We've done it again twice, so I thought, yes, it might be a slight pullback or potential touch to the trend line. Took a dip into the smaller time frames and I entered here. But before I entered, here we have the main rejection there, rejection, and that was the final rejection before seeing the push to the downside, break of this area, retest to the support or the neckline. So you can consider this left, right, or left and right, or left and right inverse, just slightly on the neckline of the inverse, and then we jumped down. Took a trade here again. I capitalized a bit early on this, so I didn't actually capture 41 pips. That's what my initial analysis was. But we closed a bit earlier. Saw this little push up, and I wanted to capitalize. I didn't want to take any losses, which unfortunately just came a bit further up near to my entry. Moved down, so I was a bit agitated that I closed a bit early. Put another re-entry, thought it might push slightly bit more down. Didn't do that, and now we're just on our way back up to testing that resistance one more time, or testing support one more time. What player did I take a trade on? Didn't take that. GBP. No. 80 USD. No, 80 USD. The trade went perfect. Played out quite well. But again, price breaching short trend line and hitting 50 or 78 levels before continuing to the downside. What's happened is, let's get rid of this for now. Oh, don't tell me I've deleted it as well. Oh, there we go. So price has come to 58, 50 retracement level just here. I'm going to the smaller time frame and break it down properly for you guys. So I had took my short after I had seen a rejection of the 50, just entered here. Price went into my favor. I didn't look into it. I saw that the price is going back up again as I was quite busy dealing with some stuff. Didn't really have the time to jump onto the computer and check it out, so I closed at a loss. Again, I didn't really follow my trading plan that I have had here. As you can see, price did hit this area quite lovely, quite precisely to be honest. We jumped back off it again. If you look back in time, we've hit this support one too many times. And interesting enough, what I sometimes do, I play around the ray lines. I like to keep it on average so that everything's hitting it. This is hitting it. This is hitting it. This is hitting it. So that it's a level of it's a reactive level, as opposed to just trying to capture, what our manipulation areas could be like. I mean, I've seen we can also do it like this as well, but the problem I have using boxes like this is just too thick. It's just too much going on. It's just a bit messy for my eyes, for my understanding. So I just have a nice little ray line there, and if it happens, it happens. As we have seen, the short to the downside, I didn't capture any moves to the upside. But I think it would have been a 60 or 50 fib, 78 fib, and then look, there we go into the upside. Lovely stuff. Yeah, so that's how that came around. Just throw that away. Generally, what happens is, especially on a trend line, when it does get breached, price generally comes back down. Hence why I had the 50 retracement, and when I saw that first push to the downside, I just took it. Should have waited a little bit more for the retest, in case if that was ever the scenario. If not, I could have waited for the whole analysis plan out and maybe even took a long opportunity. But overall, across these pairs, what I'm trying to practice and what a lot of you guys should practice on as well is just letting the trade fold out. Once you're in a trade, you have your stop loss and your target set, leave it. There's nothing else for you to do apart from just watching it and leaving it. Now AUD CAD. Now AUD CAD was a bit of a funny one because originally what I had on AUD CAD, if I even have it, I think that would be on another. Shall I find it? Anyhow, so originally I had a long opportunity placed here, but I'm going to try quickly find it. Trade analysis longs and short. What was the pair? AUD CAD. Is this AUD CAD? Okay, AUD CAD. Yes, I had that. About this. Anyhow, moving on from that. let's just leave it as it is. So I did have a long position placed up here originally, about to this, but I took a risk with the short just because we have been going short for quite some time. Had a tight stop loss. After I saw this slight rejection, I decided to capitalize on this very small pip. I think this broke me at break even or whatever, with manually closure. Overall, I mean, the long and the short were in play. The long would have had to be manually closed along the way. Short, however, if I had a very huge stop loss, a very, very huge stop loss, about 70 pips, definitely not worth it. Anyhow, let's lock that and hide it away. Again, once I was defeated with this short, I didn't really do much. I didn't take any more trades further on. I just kept monitoring and monitoring and monitoring, just to sort of give a bit more clarity and confidence in the overall performance. You know, I can't really say it was a wrong analysis or right analysis. It was just that the short and the long that I had both placed, it both could have been right. But again, as soon as you enter a trade and you focus on the smaller time frames, it kind of eradicates the rational analysis that you might have planned out. And I think that would be it, guys. So these are the trades that I did take for the week. These are the trades that I did take for the week. Overall, good performance, good analysis, but the trades, they need a bit of tweaking. I am currently journaling. Journaling is very important, so I do journal my trades before and after, how I feel, what I could have done better. So that's the main thing that I would suggest doing, especially when you might have a good analysis, you've spent some time on it, done a bit of back testing, you've put on your short or your long tool, and you've entered the trade, but then you've focused on other things that are happening, like this little scruffy little thing right here. You can get lost in your analysis straight away. You kind of forget that you have had a analysis. And what I would also advise, especially when monitoring the trades, just to try and monitor it on a computer, just so that you can actually get the big scenario. I find myself often on the mobile app, and when I see something that's not mapped out on the MT4, I will then react to that. But then when I check on my TradingView account, it might have done exactly what I needed to do, or it might have done something else. But overall, I need to start using the TradingView as a primary, sort of primary confirmation to get in or get out of a trade. So that'll be it on my side of the things, guys. So thank you very much for watching. And again, now that we have some free time in our hands, hopefully there should be more videos coming out. And I am hoping to make some vlog in the future, where me and my partner might actually get together, meet up, have a coffee or something, and we proper put our brains together and see if we can make this sort of journey a lot more likable to you guys, a lot more relatable to you guys. Just as you've seen the golds, although my analysis beforehand shows this correction, again, I did take trade on it, but it wasn't a winning trade overall. Like, this was my idea, for example, here, but I didn't take this whole trade down due to my emotional attachment with these smaller time frames. Again, with this entry that was here, I took it out at 8:23.17, but what was the reason? What was the reason for taking out 8:20.17 when I had my original when I had my original target here, just at this level, and with a push further down. In fact, funnily enough, with this second push to the downside, I texted Sean and I told him at 11:45, so just around this level right here, that we're gonna see Asia low roll into UK. This is our target. Towards the end of the day, I texted him back and I sent him a screenshot, and he did reply. But again, I was aware of the fact that this would be met. But when it came to the trading overall, I obviously suffered. In other words, it wasn't correct. I didn't follow my trading plan. I didn't stick to the analysis. My analysis telling me to enter here to down here. But why am I closing here? And again, as time goes on, you'll start to realize that maybe taking on, for example, a different pair that I did exit at this level, this might have worked in my favor. Price might have come up and took a loss on it, or if I had it on break even, it would have been break even. So sometimes you need to sort of find a balance between capitalizing on profit by just not being too greedy, but also trying to preserve your capital, but also trying to allow that capital to grow, so you don't want to be too restrictive. It is difficult. That's why you need to continuously journal. As I said, like earlier on, the DXY Euro USD, I didn't take any trades on it. I just wanted to watch how it plays out. So those are just the main key things to take away with you from this video. So thank you very much, guys. Don't want to make this any longer. Peace out.